Hey there, want to take a quick minute and share with you some thoughts as well as some interesting graphs that paint a much different picture than what we're told from the mainstream narrative. It has everything to do with, the current timing and what we're actually experiencing now. And so based upon all the indicators and the red flags and alarm bells that's going off, I try to bring them to you as they're brought to my attention from a lot of the mainstream economists as well as other alternative media individuals. But, one thing is true at this current moment, there's no hiding the truth because we're in a recession, in my opinion. And so don't expect the Federal Reserve or the U.S. Treasury to actually admit it. They have too much to lose if they did, but the indicators are telling a different story. And here on the screen here, as you can see, this is the Sahm Rule or recession indicator. And as of right now, as you can see, in relation to the unemployment status, it's trending upward. Therefore, bad things happen when it does. And as you can see on the screen here, going on all the way back to 1960. Every time it goes above the zero line and ticks above the 0.5 percentage point area, that's when we enter into these dark gray areas, which are recessions. And so from 60, early 70s, mid 70s, early 80s, all the way to early 90s, of course, to .com, everybody remembers that. And then you got 08, 09, and the short spell in 20. But here we are now today. So the Sahm Rule, with its flawless 100% track record over the last 9 U.S. recessions, has triggered again. And it's developed by Claudia Sahm, a former Federal Reserve employee. And so the fact that the alternative media now has a spin on this definitely makes it one other way that the Federal Reserve can no longer hide the truth. And of course, her indicator monitors the unemployment rates uptick, specifically a 0.5 increase over the past 12 months. And so currently the Sahm Rule is at a very troubling 0.53%, signaling a potential recession on the horizon. But hold on, because while the numbers scream caution, the stock market, on the other hand, particularly the S&P 500, was showing bullish signs over the last year especially, and we're starting to witness it turn over a little bit over the last month. Then, of course, the last 5 days, as you can see, is down 2.79%. But once again, considering the overall trend since the beginning of this year, it's still trending upward. So now the biggest question is, should we brace for impact or, for the most part, stay the course? Because as long as there's still confidence in the overall markets, things could still drag on like they have been for the last couple of months. And so while the unemployment numbers are crucial because they've been right every single time when they tick up, but then again, we've never been in an environment where also the stock market continues to surge, relatively speaking. So as of now, we have to wait and see how this all plays out because once again, we are in uncharted territory. And at this current moment, the monetary experimentation that we're all a part of appears to be like a week by week, month by month type of event. So in the short term, the biggest thing is just keeping an eye on all this. But of course, my opinion will be to dial back a lot of your long-term expectations on the markets because of all the volatility and be more specific as to what you're actually going to do, whether it be looking to short the markets or get in, get out in certain sectors in the form of day trading or something like that. And then if you're not too savvy on any of that, follow the Warren Buffett strategy, which is to liquidate a lot of your so-called guaranteed companies and sit in cash in the short term and just wait for the fire sale that, of course, we're all expecting. So, and then on top of that, ensuring yourself by holding precious metals is the best way to navigate these things. But once again, this is all my opinion, just bringing it to you right now to share my 2 cents as well as these graphs. Curious to hear what you guys think. If you want to see more of these little short takes, definitely hit that thumbs up. Leave a comment down below so I know that you guys are feeling me on all this, and then share it so more people can find out what's going on. Anyway, catch you guys later.